Let's start with the S&P 500. You think we've reached the peak? Is it that where we're going now, though? Is it really signs of a significant correction in this market?
I think this is clearly what we're trying to sort of determine at the moment in terms of the market. I mean, for us, looking at the S&P 500, 1900 was our medium-term bull target, and so we've certainly turned down from a major target resistance zone. And I think the other concern, if you're looking for signs of more longer-term top, is if you look at the average time of all the bull markets of the last 60, 70 years, you're doing it in that type of, this is a 5-year bull market. You're in with that average as well. Yeah. We're seeing exhaustion signals into that peak. We're seeing various momentum or volume downturn. So there's clearly that backdrop that we might be in a much more sort of important turn. At the moment, we put in a near-term top, but we haven't broken any what I would say levels that indicate it's a medium-term downturn as yet. But I think the risk of that, if we were pricing it sort of 2 months ago compared to now, has clearly increased quite sharply.
So what levels are you looking at now? From where do we go from here?
For us, we can see this weekly chart. We failed at the top end of this long-term trend channel. Yep. We've taken out what has been, never mind some moving average support, the lows that we've had for the last 2 months. And you can see there the recent price action of these weekly bars. We've basically held 1834 6, 7, 8 weeks in a row. Last week we took that out. We took that moving average out. So that came through on higher volume as well. And indeed, that new move to a new high was not confirmed by volume. So our view is that we go down to 1800 initially, which we're not a million miles away from, nope. And then down to the lower end of the trend, which essentially we can look at a combination of trend lines and moving averages, and we have that starting around 1785 and moving down to 1770. So our view is that we hit 1800 first of all, bounce from there, and then go down to 1785.
All right. We've pulled the Nikkei up. Oh no, we got there. You go. The Nikkei's up there, and let's talk about the topics as well. Yeah. You believe they've both completed tops as well?
I believe they both completed tops. It's been very interesting, Nikkei. If we sort of quote on this chart here, but if you actually overlay it sort of on the very long term, again we got the channel on there. We've actually failed at the top end of that channel. If you go back even further, all the way back to the beginning of the bear market back in the late 1980s, that rally that we saw last year pretty much went exactly the top end of its secular bear trend. And failed exactly. We've now taken out 14,000 in the Nikkei. We've taken out 1138 in the topics, which is essentially the lows that we've put in place earlier on this year. So our view, there is a top in the Nikkei, there is a top in the topics that should take the market low. I think what's interesting is we haven't seen dollar yen move lower yet, and given that this correlation has been very close together, it's that I think is probably the wrinkle in the near term. Either is this a decoupling between the equity market and the currency, or is the equity move lower false? I don't think either of those are true. I think dollar yen's going to play catch up, but I think that will be the thing to watch out for in the next day or two, whether that does indeed come through.